Welcome back to the Brent Bruce Daily. Today is August the 26th. It is 1:48 p.m. Central Time, and a lot is going on. So much is going on that I wore my Savannah Bananas hat because things are going crazy today. So as we talked about, Jerome Powell made his comments after the Jackson Hole meetings, and we also received the PCE today, the Personal Consumption Expenditures number. And it's interesting seeing how everyone is responding. We basically have a report that shows headline numbers that say one thing and month-to-month numbers that show something different. We have the mortgage-backed security market moving in one direction and interest rates moving in the other. Why would that be? Let's take a look and find out what's going on. So again, the chairman of the Federal Reserve is basically saying that we are going to do whatever it takes to get inflation under control, even to the point that our moves may bring some pain to households and the consumer. So they are going to raise the federal funds rate or use whatever tools they have to basically choke out the economy to where it slows down. It was so hot and it was so active that they're going to choke it out. And that may actually cause some pain to households because things are going to get tight. And they're going to, because inflation is running rampant. And let's see what the stock market thinks about that. Well, let's see. Down 2%, almost 3%, down over 3%. So the investment community is not liking that. Even the mortgage-backed security market is down 25. People don't like hearing that the government is going to, that the Federal Reserve is going to choke out the economy in order to bring inflation down. And basically what Jerome Powell is saying is, we don't want to do it, but we have to do it. This has to come back under control. So the personal consumption expenditure is the reading of inflation that came out today. The CPI and the PCE are the two that we really take a look at. So basically, the personal consumption expenditure came out and showed year over year rising at 6.3%. Okay, so inflation is at 6.3% according to this report, down from 6.8, which is a good thing, right? That means that inflation is subsiding. So that comes out and says, all right, this is good news. So the reading on a month-to-month level, this is an annual level. So on a month-to-month level, the headline number shows that inflation fell by 0.1. But if you look over here, the core PCE, and what makes it the core PCE is that it excludes food and energy. Okay, so what if you took this reduction in inflation numbers through the PCE and said, but what if you don't include food and energy? Well, it actually rose by 0.1% month over month. That is what we really want to pay attention in this scenario, because what if gasoline prices go back up? Then all of a sudden that PCE number really wasn't beneficial to us. So take out food and take out energy. And what about the rest of the economy? Well, actually, the inflation number went higher. And people read through this. People see through this. The fact that the president opened up the reserves in order to get gas prices down is not really bringing down inflation on a long-term basis, unless he's going to start pumping gasoline and oil, which would mean he'd have to open up the pipeline and all this kind of stuff. So that's where we're looking a little bit further into things, right? So the PCE number had a headline number that was good and showed inflation coming down, but looking further into it, like investors do, they're seeing that inflation was still hot. And here we are hearing Jerome Powell basically kind of getting a little crazy, saying we have got to do anything, even if it hurts the consumer, to bring inflation under control. Sounds almost a little frantic. And one of the other board members stated that they want to see the federal funds rate at 4% soon, like right away. Well, right now we're at 2.5%. Okay, that's a big jump. So I think they're going to get really aggressive. I mean, it's almost like they're getting ready to raise the federal funds rate by a full percent or more, the way that they're talking about things. So what does that mean for the home loan interest rates? So as you can see, and we talked about earlier, the mortgage-backed security market is not liking that. Okay, so why would the mortgage-backed security market not be happy today when the personal consumption expenditure headline number shows inflation coming down? Well, number one, they look further into it and see that core inflation actually was going up. Number two, they're hearing the Federal Reserve chairman kind of being frantic as though we really got to do something about inflation. Okay, so that's why we're seeing, I believe, that we're not seeing a good run. We're seeing the mortgage-backed security market take another hit today. All right. So here we are. We had a little bit of a good number here yesterday because we were anticipating aggressive numbers coming out from the Federal Reserve, aggressive comments coming out from the Federal Reserve. And we got that, but for some reason, they just didn't like it. So we have a negative day today. We're still in this broad area where we have a ceiling above us and a floor way below us. So we just are still kind of waiting to see which direction we're going to go, but definitely not the good day that we were hoping for today. So how are home loan interest rates responding? And this is where it gets a little weird. We got to make sure that we pay attention to this. So we jump over to the Brent Bruce Daily. Remember yesterday we had a 5.5%, but we were very close to losing it and falling into the 5.625% range. And we were waiting to see how things came out today. So let's take a look. Let's run the Brent Bruce Daily, which again is a very well qualified 30-year fixed conventional home loan, 800 FICO score, and it's at 5.375. So why would the mortgage-backed securities be down 27 basis points, but the home loan interest rates improved? I talk about it all the time. That's contradictory to what I say, right? The mortgage-backed security is what moves the home loan interest rates. And this is where I'm going to have to teach a little bit deeper about the fact that the mortgage-backed security market is what somebody can sell a mortgage-backed security for. Okay, so what is it worth? Now, the banks, they get to do whatever they want after that. Okay, so for instance, if I can buy a Snickers bar for $1, what I sell it for is up to me. And I'm going to sell it for what I think based on the economy and demand and inflation and all of those kind of things. So yesterday when we were looking at this and we were at 5.5, and I thought that we were going to be having a different rate yesterday as well. And I mentioned that I thought the banks did not pass along the benefit of a good day. They held onto the 5.5, and I thought they should have been at 5.375. Well, now here we are, 5.375, even though we're having a bad day today, because the banks now heard from the Federal Reserve. They heard from the personal consumption expenditure numbers. They're making their assessments, and now they're going back and repricing their business according to what they think they need to do in order to be competitive. So they actually took a pause yesterday. It was pretty evident that they took a pause to see how things came out today. Now that they came out today, they can go ahead and put their prices out there. Okay, so understand that mortgage-backed security market is going to influence and move the interest rates up and down. But think about it. Some banks right now are offering 6.25%. Well, we're offering 5.375. They just want more margin, right? So, and maybe they see more risk from their advisors. Who knows? But this is why we're seeing today a disparity between the mortgage-backed security market and the interest rate market, because I think yesterday the banks were holding back. Now that they have the news that they wanted, they say, okay, we know where we're at. Let's go ahead and give that reduction that should have come out yesterday. And now we're at 5.375. So let's see how things go. I know we're going a little bit long today, but with the Federal Reserve talking, the PCE coming out, and the fact that we have a disparity between mortgage-backed securities and home loan interest rates, we needed the time. So I will get back with you again on Monday. Have a great weekend. Thanks a lot. And make sure that you subscribe, like, and share. Have a good day.